All right, let's get to our big story of the day, which is recession warning signs. So I'm going to put this headline up here on the screen. And this is a really important story. I want you guys to pay attention to this because it really could affect your family. It could affect the next year or 2 years of your finances, your planning, your savings. What are you going to do to send the kids to college? All of that is going to be affected in the next few months. So something really interesting happened. We're going to get to, but I want to give you the broader big strokes first. Then we're going to get into a really interesting phone call that happened on an earnings call. But here, look at this headline: 5 and 30-year Treasury yields invert for the first time since 2006, fueling recession fears.
So what does that mean? It means that there's more interest in a short-term Treasury bond, which is you buying a bond that lends the government money, and the government decides it will give it back to you, right? Either at a high rate of return or a low rate of return. So that means 5-year bonds for the first time are outpacing 30-year bonds. Why is this?
Well, should we go to the whiteboard?
Okay.
Let's go to the whiteboard. So if you're listening to the audio version of this, I'll try to articulate what I'm going to do here. So let's get out the whiteboard here and go to it. So let's do a curve, okay? So let me just show you. Normally, this would be the curve that you want. So this is the normal way of making money, right? Here's your yield over here. And then this is the maturity date of the asset you're buying. Sorry,
it's kind of off the screen on the left.
Oh, sorry.
It's okay.
There we go.
Sorry.
He wants to give himself a lot of space.
Okay.
There we can see it.
There we go. Okay.
But I do appreciate you labeling the axes.
Yield, thank you. Yield is over here, and the maturity of this asset is here, right? Normally, you would buy it, right? And you hope that, okay, over the life of this curve, this is a normal, healthy-looking curve, that, well, I'm going to sell it when I'm like 65 years old, and I'm going to make some good money because the yield will be higher, and it matures here, right? That's what you would normally want, right? Well, an inverted curve is not good. Let me show you the opposite of that. Sorry, let me get rid. I wish I had an easier way of doing this, but I don't. So here is what we're seeing right now. Here's the yield, here's the maturity, and here's what we're seeing now. So that's not good. That is not good. That's an unhappy face. So you're basically buying it higher and getting it, when you sell it, down here.
Right, which is changing the demand for these types of investments, which are typically thought of as a good way to diversify your assets because they are more secure or more predictable than, say, some kind of stock-based fund for an actively traded stock. And so investors will take usually 30% of their portfolio and put them in these government bonds that they think are a safe bet because they pay out, I'd say conservatively in the 2.5%. And so now people are realizing the United States, to put it simply, may not be good for it, right? We don't know how long the dollar is going to be something that you can bank on, that I can put $1 in the bank and get $1 back, that I can lend $1 to the United States government and get $2.50 back. That's not a sure thing any longer. And so investors see that. They're reading the writing on the wall. Usually that is a tremor for something bigger to come.
Right. So the U.S. curve has inverted before. And the reason we say these are warning signs is because when this has happened, when this curve has inverted, it has happened before every recession we've had in the United States since 1955. So follow history. Okay, that's what I want to talk to you about. I mean, you have to be a student of history here. It's happened every time since 1955, and it's occurred, a recession. Once this inverted curve has happened, we've seen a recession about 6 and 24 months later. Now, we don't even need really to predict this. We know it's already happening because Jerome Powell has already said in their move to raise interest rates that this is coming. That means a slowing of the economy. You already see it in the housing market. You see it in prices across the board and the rising cost of gas. President Biden today about to unleash about 180 million barrels of oil from the strategic oil reserves. So price concerns at the White House. Jerome Powell was asked this very question on prices and where does he see, what is his plan here? And he really gave the answer that Senator Shelby was hoping he maybe wouldn't give.
Is the leadership at the Fed under you and the Fed prepared to do what it takes to get inflation under control and protect price stability?
Well, let me say I knew Paul Volcker. I'm pretty sure I saw him testify in this room many years ago. I think he was one of the great public servants of the era, the greatest economic public servant of the era. And I hope history will record that the answer to your question is yes.
So you're prepared to do what it takes without any reservation to protect price stability?
Yes.
That would be a departure of what you've done. Thank you very much.
Ouch. Ouch.
Well, let's sort of define what we mean by recession, right? Because already we have inflation. So the normal average person's dollar goes less far, buys fewer things, right? But a recession is something that would affect everybody. We can see that inflation is affecting people at very different rates, right? There are certain classes of Americans that do not seem to be deterred, where this inflation is no more than a speed bump. So are we talking about a recession that hits everybody?
It appears that way. I mean, the recession arguably would hit everyone. Of course, it won't hit the wealthiest, right? The wealthiest Americans, they're going to be fine, of course, because when inflation rises and those that own those large businesses, prices go up. They get to take 5 Doritos out of the bag and still charge you for the same amount of Doritos, right?
Right. Or, the saying goes, when the going gets tough, the tough goes shopping, right? So there will be investors who've been waiting for a bottom to fall out of a market to swoop in. I'm not talking about those people, though. I'm talking about how we're going to define recession, because by many measures we're here.
We're already here, and this is what I wanted to talk about. So I think this is a really interesting thing that happened last night during the. I didn't even know that Restoration Hardware changed their name. Did you? To RH?
No.
Did you know that? I didn't know that. So Restoration Hardware changed their name to RH a while ago, and this morning is the way that Bloomberg paints it. Everyone's been talking about this earnings call last night. Now, I don't know if you know much about earnings calls, but when you are the CEO of a company and you go on your quarterly earnings call to talk about the state of the company,
yes,
to talk about your quarterly results, you do not fly by the seat of your pants. And when you fly by the seat of your pants, like the SEC comes knocking. Like, you've got to stick to the script. You've got to talk about what you expected on your numbers and what you expect going forward, your quarterly guidance. You do not go off camera. You do not go off script. So it was with great interest that people are paying attention to what happened with Gary Friedman. Now, Gary Friedman, on this call, just last night for his earnings call, talked about the really ominous he used, and he talked about it in terms of like The Big Short, the movie, like the book by Michael Lewis, but the movie like The Big Short. Like, we are really seeing ominous macroeconomic signs, and he likened what he was seeing to The Big Short. And a lot of people are like, whoa, did a CEO of a major company just say that? And he says, specifically what we've noticed at our retail establishments, number one, is just like, no one's coming in. Like, no one's shopping at our stores.
Okay, but also the couches start at $10,000.
No, they're not that expensive.
Yes, they are.
They're not that expensive.
I mean, okay, but...
Okay.
But that has nothing to do with it. I mean, he also talked about how shipping crate prices are doubled and then doubled again, right? So for retailers such as his, he cannot import things from other places, and a lot of that stuff is not made in the United States. So is this applicable to all business models, or just the sort of luxury high brand furniture that's shipped from Indonesia?
I have to think I think it's across the board, and it's only going to get worse, as you hear from Chair Powell. We know that these prices are going to continue to go up. Inflationary pressures are going to continue to rise, upwards of 7, like the actual rate at 7% now. Imagine 10% probably in the next few months, right? Not very far off from where we were in the 1970s. When we hit like 17, 18%. So there's all this talk right now about Paul Volcker and kind of going back to this, not being afraid to raise interest rates to kind of keep up with this pressure of a crisis. But guess what happened? We went into a crisis.
Yes.
We were in a crisis. I mean, so much so that the famous Jimmy Carter malaise speech, even though he didn't say the word malaise, it was portrayed that way. He goes on television. He's like, look, I know you're all sad. And it was like, womp, womp.
Yes.
And people couldn't afford gas. They couldn't afford homes. was a really dark time. And I think, the signs are pointing there again for people. So we need to be paying attention to this.
Now, he says that drop in demand corresponded with the conflict in Ukraine and Russia, which also, it's really hard to connect these dots between Restoration Hardware's high-end design shop and this conflict, right? And especially because I'm having a hard time like connecting this as a meaningful event other than a CEO sees something that, you know what I mean? Like, what is it we're reading into? Because he's going wild?
Well, I think the fact that he is making these larger macroeconomic considerations on a conference call, on a quarterly earnings call, that you do not go off script, and he's likening it to the coming days of what he's seeing in the economy around the time of 2008 and the 2008 collapse. And he's seeing it, and he's sounding an alarm bell about it, and I think we should all pay attention to it. No one listened to Ron Paul, then Senator Ron Paul, when he was sounding the alarm bells about what he was seeing in the economy. No one was listening to him.
Yeah.
No one was listening to him when he talked about the insurance market that could collapse as a result of the housing market. No one was paying attention to him. So here's a CEO who's watching these numbers on a daily basis. He's seeing this bond yield inversion. He's seeing what's happening at his stores. He's seeing what's happening in the supply chain. And then, oh, by the way, we've got Ukraine and Russia.
Yes.
On top of all of that. And so I think there's a lot of interest there. And hey, I want to bring it to people's attention. But you don't even need to listen to the CEO. Just look at what's happening in the market. Look at what's happening with this inversion yield right now to know that the curve has inverted before every recession we've had in United States history.
Yes.
When that's happened, we get a recession. Well, it's happened again. So do we just simply ignore it?
Well, one thing that I thought that he said was interesting was that retailers will not be able to import quality products anymore, which indicates that the United States does not make quality products on their own shore. And what you'll see then is retailers trying to plug that gap with poorly made products in its place, indicating anything made in America is poorly made. And so, just don't get used to your nicely made, wood from Indonesia anymore. That's not going to happen.
Well, we saw that last time, right? Do you guys remember? We saw that during the last recession when there was this big push to buy a made in American stuff. But there's just we would do segments on Fox where we'd had the Made in America segments.
Oh, I remember the pedicure boots.
I mean, they were awful. I mean, there were literally few items that we could even highlight that were well made or useful. I remember even
well, in most of them now, it's
you don't think
it says
pedicure
Made in
boots
America
are useful? It was these snow boots that they had this layout of things that were made by American entrepreneurs, and one of them were boots that you wear to get snow boots that you wear to get a pedicure.
That you take to get a pedicure? They give you a pedicure?
You put snow boots on, you take them to get a pedicure, but the toes were ripped out so that you could paint your toenails and then walk out.
I'm not even laughing.
Sounds like sandals with more steps.
Right.
It basically is. They're if you live in cold weather, I mean, you guys just Google it, pedicure boots.
Okay, but anyway, David, you were going to say something?
Yeah, I was just going to say, Made in America now, it's it says Made in America, assembled in China. So it's they're still using Chinese parts and everything. So it's Made in America, when with Tonka trucks and stuff, it used to mean something. But now it's American made doesn't mean anything anymore to me.
Yeah, and so again, it's such a global economy. This part comes from this country, this part comes from that country. You put them all together, it might be assembled in America, but none of these things. And this idea that we're going to start to bring all kinds of manufacturing back to the United States is just laughable. It was laughable during 2008. It was not going to happen. I mean, we had Fox News anchors who were would do these segments, and I'm not going to tell tales out of school and who name names, but people not me, would come in after doing a segment. They're like, man, this stuff is crap. What is this stuff? This is all we have to offer?
Yes.
The only thing that was worthwhile was these work boots. That
right.
was it. The other stuff was crap. I mean,
well look at Apple. You think Apple's going to bring their manufacturing to the United States? Because their profits would go way down with the wages that they'd have to pay and all that stuff. These companies are not incentivized to do that at all.
Yeah. And it's not even just the wages, right? I mean, it's the laws. There's a whole bunch of things that go into that. So, yeah. And there's no way that ship has sailed. That ship has sailed to Mexico and to Vietnam and to India, and that is not, you're not putting that horse back in the barn. However many other metaphors I can think of. but that's not going to happen.
Well, it's just another highlight of the fact that our global economy is interconnected. Everything we buy is geopolitical, and it does seem to be unsustainable, and how it's going to like collapse out from underneath us, we're about to see.
If you like this content, be sure to subscribe to the channel. Also, we have a membership program. For the price of a cup of coffee once a month, you can support independent journalism just by going to morninginvest.com/join.
You get access to exclusive videos, plus the ability to join and chat with us live. We really appreciate your subscription, and you are supporting independent journalism.